Hi friends, welcome back to EduTap. In this session, we are going to discuss SEBI Grade A previous year questions which were asked in 2022, and these questions they relate to commerce and accountancy part which have been picked from the paper 2 phase 2 of the SEBI Grade A 2022 examination. Total 9 questions were asked from this section. So very quickly, let's start our discussion on these questions. Now coming to the first question, which of the following is incorrect regarding provisions? Options are they appear on the company's balance sheet under the current liabilities. A provision should be recognized as an expense. Provisions represent funds put aside by a company to cover anticipated losses in the future. Provisions are contingent upon happening or non-happening of an event in the future. So my dear friends, this question it relates to the distinction between the provision and the current liability concept. Okay, so provisions basically we create because we may have to incur some expense in the future. So we create these kind of a provisions and we are very much certain that this kind of a loss is going to happen in the future. For example, we create provisions for bad debts. We create some other provisions as well, like a provision for tax is also created. So this liability, this outflow of the funds is kind of a sure to occur, but for contingent liabilities the surety is not there. Okay, contingent liabilities, they are contingent upon happening or non-happening of an event in the future. For example, if a case in the court is pending against us, so this case it may result in outflow of the funds or it may not result in the outflow depending on the outcome of the case. So option number D, it pertains to contingent liabilities and not provisions. So clearly this is going to be the incorrect one. This is going to be the answer to this particular question. So you have to have a basic understanding of the differences between the provisions and contingent liability. So we have tried to bring down all these differences on this slide. So you can simply take a look at these differences. You can simply read these once. Let's come to the next one. Calculate the net profit from below cash basis of the accounting for 31st March 2021. So we have to calculate the net profit, but we have to follow this cash basis of the accounting, not accrual, but cash basis. So all the due transactions are not going to be recorded. Only those transactions for which we have received cash or for which we have paid cash, irrespective of the accounting period to which it pertains, it is going to be recorded in the cash basis of accounting. So first we have credit sales. So credit sales, no cash, not going to be considered. Cash paid in salary 25,000, it is going to be considered as an expense. So this is going to be written in minus. Advance received for 2022-2023, though this is an advance because but we have received the cash, so we are going to include it in the income. And ticket of airline purchased in 2021 for travel in 2022. Now again, a payment we have done this payment, though it relates to future, but as the cash payment is done, we would have to consider it because we are following the cash basis of accounting. So using this, if we do the calculation part, 8,500 would be the net profit. So correct answer is going to be option number C. So as discussed, option number C, 8,500 is going to be the correct answer. Coming to the next question, using the information given below, calculate the interest coverage ratio. So we have to calculate this interest coverage ratio. If you know the formula, things can get a bit easier. The formula is EBIT divided by the interest obligation. Okay. We are given the profit after tax is 60,000 and tax rate is 40%, 15% long-term debt of 10 lakh. So interest on it is going to be 1,50,000. Okay. So we know the interest part, it is 1,50,000, but we do not know the EBIT. So we have to do some calculations for it. Okay. Now this profit after tax is given to us. Let's try to understand how this entire chronology or entire sequence works. So first we get the EBIT. From this EBIT we reduce our interest. Okay, and the figure that we get is the earning before taxes. From this we reduce the taxes and then we get our profit after tax. So we are given this profit after tax at 60%, 60,000. Okay, so we are given the tax rate is 40%. Okay, tax rate is 40%. So balance after 40% is 60,000. So we can easily make out that this is 60%. Okay, if 100 was our earning before taxes, then we would have paid 40 in the taxes and profit after tax would be 60. If 60,000 is our profit after tax, it would mean कि हमारा जो earning before taxes होने वाला है, that is going to be 1 lakh. Okay, that's simply unitary method that you can follow. interest we already know is 1,50,000. Okay, so earning before interest and taxes would become 2,50,000. Okay, so we have done all the back calculations and we have got the EBIT as 2,50,000. So if we try to solve this one, 5 divided by 3, 1.67 times, that means option number C would be the correct answer. So as discussed, option C is the correct answer. Coming to the next question, calculate the book value per share of ABC Limited using the information given below. So we have to calculate the book value per share. So this book value basically means ki what is the amount standing in the books of accounts that pertains to the shareholders. So number one is the profit which pertains to the shareholders. It is the profit after tax. It belongs to the shareholders. So we are going to have to consider it. Then is the issued shares, the shares which have been issued to the shareholders, they definitely belong to them. So 70,000 into 10, 7 lakh, it belongs to the shareholders. Market value of the share. Now market value is not relevant when we have to consider the book value, because market value is nowhere shown in the books of accounts. Okay. So if we add these things, it is going to become 8,75,000. And if we divide it by the number of shares, which is 70,000. So let's try to arrive at some value here. So what is going to be the correct answer? Let's try to do some solving part here. So I believe if you solve it, it is going to become 12.5. So answer would be option number B. Yes, if you try to solve it, answer is going to be option number B. This is the same calculation that we did, and I believe you are able to understand what is this book value per share. Option number B would be the correct answer for this question. Coming to the next one, calculate the gross profit ratio from the information given below. Okay, this gross profit ratio is basically relation between the gross profit and your sales revenue. Okay, so let's try to establish this one. Sales we are directly given, but gross profit is not something which we are directly given. We are given different kinds of information which are here. Now gross profit can be calculated by doing this calculation, sales minus cost of goods sold. Okay, and this cost of goods sold, it basically includes opening stock plus purchases plus your direct expenses like carriage inwards minus your closing stock. Okay, so here we are given purchase of 75,000, direct expenses of carriage inward and wages are given. So let's add these 7,000. Salary is not considered in this direct expenses. Salary is an indirect one and considered later on while computing the net profit. Decrease in inventory, this opening stock minus closing stock. Okay, opening stock minus closing stock, it would denote the decrease in inventory. It is also given to us at 10,000. Purchase return is given to us as 2,000. So purchase is 75,000 the. So we have to reduce this purchase return of 2,000. So we are going to reduce this 2,000. So if I try to compute this one, how much this is going to be? This is going to be 90,000. Okay, my cost of goods sold is going to be 90,000. My sales is 1 lakh. Cost of goods sold is 90,000. So gross profit is going to be 10,000. Now applying the formula, gross profit divided by sales into 100. This is going to become 10%. Option number B would be the correct answer for this question. So I believe you were able to get the calculation part. Option number B is the correct answer. If you want to be perfect in these kinds of questions, you have to practice a lot of numerical problems. Coming to the next one, a company purchased inventory 1000 units at 1200 per unit from outside vendor. Vendor allowed a trade discount of 5%. So 1200 for 1000, it means 12 lakh we 12 lakh worth of items we purchased. Vendor allowed a trade discount of 5%. So 5% of this is going to be 60,000. Yes, 60,000 it is going to be. So 1140 would be the net amount. Vendor offer a cash discount of 3% as payment is made in 45 days. Company decided to avail that as well. So company is going to get 3% additional discount. Custom duty is 50 per unit and delivery charges are rupees 6,000 as a whole. Find the value of inventory as per accounting standard 2. Now this accounting standard 2 you have to follow to arrive at the value of the inventory. Now very important thing you have to remember कि inventory से जुड़ा हुआ जो भी expense है you have to include it here, but you have to understand the distinction between the trade discount and cash discount. So whatever trade discount you are getting, you would reduce from the value of the inventory, but cash discount, it is not reduced from the value of the inventory. Rather, it is separately treated in the profit and loss statement. It is not adjusted from the value of the inventory. So this is something you have to remember. Rest, you have to include all these things. 50 per unit, it means 50 into 1200, how much this is going to be? 50 into 1200, I think this is again going to come out to, this is going to be how much? 50 into, sorry, 50 into 1000. This is going to come out to 50,000. And this 6,000 is going to be my delivery charge. So if I total these, it is going to be 11,96,000. So correct answer would become option number B. Okay, so cash discount ko consider nahi karna. Rest all you have to consider as per accounting standard 2. So that's why the correct answer would become option number B. Okay, so do remember, as per AS2, cash discount will not be considered. 1196 is the correct answer. Coming to the next question, value of a machine is rupees 12 lakh for 10 years and its residual value is nil. After 5 years, the remaining machine life is increased by 3 years and the value increased by 1,20,000. Find depreciation for the 6th year on straight line method basis. Okay, so here there is a twist in the story. After 5 years, this twist is going to happen. So let's talk about the first part. Okay, the part before the 5 years. So 12 lakh machine we purchased. 10 years was its life. So every year we would depreciate 1,20,000. So in 5 years we would have depreciated how much? 120 into 5, 6 lakh we would have already depreciated. Okay, and the balance 6 lakh would stand in the books of accounts. Now, after 5 years, now what we did, we increased its life by 3 years. So after 5 years, its useful life would have been remaining only 5 years. Now we increased it by another 3 years. So total life is going to become 8 years. And we also increased its value by 1,20,000. Okay, so now the new value is going to become 7,20,000. So 7,20,000 is the value, 8 years is the remaining life. So how much you are going to depreciate every year? Simply divide these two. So this is going to come out to 90,000. Okay, is very easy calculation. So correct answer would become option number A. So this is how you have to approach this question. So as discussed, correct answer 90,000 is going to be the right answer. Coming to the next one, company ABC Limited took a loan of $10 million for 3 months on 1st January 2021. Exchange rate at the time of the contract, it was $1 is equal to 70. At the time of repayment, it was $1 is equal to 72.5. Find the amount of profit and loss for the year 2020-21 for the company. Now, when the company took the loan, $1 was is equal to rupees 70. Okay, जब company ABC को पैसे मिलने थे, तो $1 it was equal to 70. But when the company ABC have to repay the amount, okay, on 31st March, the company ABC was required to repay back the loan. And at that time, $1 was 72.5. So dollar became expensive. Okay, so now the company would have made more outflow. How much more outflow? So rupee 2.5 per dollar. This is the loss which was incurred by the company because now the value of the dollar it increased, the value of the rupee depreciated. So company को payment करना था rupee में, so that's why it incurred a loss of rupee 2.5 per dollar. And how much dollar it had to pay? It had to pay $10 million. Okay, $10 million. So if you do the maths here, how much this is going to be? I believe how much this is going to be. This is going to be how much? $10 million. $10 million आपके कितने हो जाएंगे? 10 million is equal to 10 lakh. So this is going to be 1 crore. This is going to be 1 crore. Okay, 2.5 into 1 crore. This is going to be 2.5 crore. So 2.5 crore of loss is going to be incurred by the company. So correct answer would be option number B. So as discussed, option B is going to be the correct answer. आप अलग अलग calculate भी कर सकते हैं लोन कितने का लिया कितने का वापस किया, but the easier way is to simply reduce this 70 from 72.5 and multiply it by 1 crore. That would give the same answer of 2.5 crore. So you have to think logically. Now coming to the next one, which of the following is incorrect with regard to cash and cash equivalents? So when we are preparing our cash flow statement, which is a part of the financial statements of a company, we are talking about the flow of cash and cash equivalents. So what are cash equivalents? They are those assets which you can easily convert it into cash without any uncertainty, and you can simply convert these into cash, and there is not going to be a much delay in the conversion of these items into cash. Usually these items have maturities of less than 90 days, less than 3 months. So less than 3 months maturity, they are considered as cash equivalent. Okay, so this is something you have to remember. Cash equivalents include bank accounts and marketable securities, which are debt securities with a maturity of less than 90 days. Yes, this is true. Any item falling within the category, within this category, are classified within the current assets in the balance sheet. Yes, these are all current assets. Cash and cash equivalents include the bank deposits with more than 12 months of maturity. So more than 12 months of maturity are not going to be considered a cash and cash equivalent. Rather, it is not going to be considered a current asset as well. So this is not going to be the correct one. Cash and cash equivalents shall be classified as balance with banks, checks, drafts on hand, cash on hand. So yes, all of these are cash equivalents. Okay. So point number C is going to be the incorrect one, because 12 months is other, it is not going to be considered here. So option C is going to be the correct answer for this question. So as discussed, option C is the correct answer. So thank you, my dear friends. This is all about our discussion for today. I believe you were able to understand the questions that we discussed today. So this is it for today. Thank you. Bye. Happy learning.